When should I sell and how do I maximize that? For a creator, there's a few things a buyer's going to look at. For a lot of creators, this is a big obstacle. If you're a talent-driven channel and you take the creator out of it, where's the value? Some great examples of creators who have navigated that successfully. Smosh, Mythical Entertainment, Theorist Media. Be frank with people up front. These are maybe the reasons why you wouldn't want to buy the business. Buyers see stuff all the time, like you're better off just tackling stuff head on. Even though the creator economy is 10, 15, 20 years old at this point, we're still in early innings. I fully expect in the next 10, 20 years, just about every direct-to-consumer brand will have some sort of creator ambassador. These creators have a negative customer acquisition cost. We've definitely seen activity picking up. 2024 was a banner year. All signs point to there's a lot of strong momentum in the category.
Hey everyone, welcome to the Creator Ops Podcast. I'm your host, Thomas Schreiber. The goal of this podcast is to educate you on becoming a great operator in the creator economy. On today's episode, I talk with James Creech, who is a serial entrepreneur and experienced M&A advisor who has spent over a decade in the creator economy. He was previously the co-founder and CEO of Paladin, an influencer marketing platform that was acquired by Brandwatch in 2022. Currently, he is the founder of Quartermast Advisors, which helps founders navigate the M&A process to successful exits. During this episode, we unpack the nuts and bolts of selling a creator business. We cover what buyers expect and how to navigate due diligence, strategies to reduce key person risk within your creator business, how valuations and multiples are determined and what actually drives higher value, the critical role of revenue diversification in a successful sale, and lastly, how to prepare your business today for a successful exit down the road. And now, without further delay, here's my conversation with James Creech. We're seeing more creators thinking about the end goal of their business, whether that's selling the entire thing, selling 50%, selling 20%. If you're advising someone who wants to eventually sell their channel in maybe 5-10 years, what needs to be true in order for them to have the most options? What should they start preparing for so they can be in a good position when they eventually want to sell, or if they don't want to sell, however that looks?
Yeah. We have a lot of conversations with founders, operators, creators who are thinking about when should I sell and how do I maximize that? I'd say the smartest folks are planning at least 12 months in advance about a transaction to make sure all the business housekeeping is in order, that they know what's important to them as they go through it. For a creator, there's a few things a buyer's going to look at. The first is the content itself, right? What's the quality of the content? Who's the audience? How is that resonating? How are they monetizing? So they're going to look at their various revenue streams. Is it all programmatic ad revenue versus direct sold versus brand deals? Do they have direct to fan monetization? What does the revenue kind of pie look like? The next is what's the key person risk, right? For a lot of creators, this is a big obstacle. Is if you're a talent-driven channel and you take the creator out of it, where's the value? So you want to think about how is there value or life to my content beyond me? And that can be, bringing in new hosts and creating a rotating cast of talent. It can be, there are faceless channels, right, that don't rely on a personality or more driven by a topic or a subject matter. But solving for that key person risk, even if you're not on camera, are you still fundamental to the business operations? Like you own all the relationships with major advertisers or anything else that might be problematic or introduce risk. And then the last is, really just the financial performance of the business. What's the history? What do we expect the future cash flows of this thing to be? And so that's going to look at growth rate, unit economics, like margins, and then fundamentally, what's your EBITDA? And do we expect that to be consistent or is it growing or contracting every year?
So a lot to dive in there. I want to talk about the key person risk to start, James. How do you see more creators mitigating the key person risk? And I think that's a lot of the kind of pushback to whether it's investors or buyers is key person risk is just so it looms large over a lot of these deals. How do you mitigate that as a creator who maybe you are so reliant on yourself? How do you make that transition seamlessly?
Well, let's look at some examples, right? I mean, some classic examples here are Smosh. So you had Ian and Anthony, who were the face of Smosh for forever, and they ultimately introduced secondary channels, Smosh Games. They brought in kind of a cast of talent, so replicating like the SNL model, where the property is SNL, and you've got rotating cast or talent every year, but you can kind of bring new voices and personalities in. And yes, they're going to be iconic individuals in their own right, but the strength of the brand is built around the cast of talent. Same has been kind of a similar playbook for Mythical Entertainment. So Rhett and Link are still very much active in the business, very much the face of the brand, but they've built a Mythical Kitchen and other kind of brands in and around the identity. And then you can look at like what Matt and Stephanie did with Theorist Media, right? Where they had a portfolio of channels. They built them around subject matter. So they had kind of gaming and fashion and other kind of lifestyle content. And they slowly introduced the audience to a new host. So they said, hey, we want to find someone whose tone and personality and everything else that obviously brings something new to the channel, but can kind of still have the look and feel and honor the legacy that Matt and Stephanie created. So those are some great examples of creators who have navigated that successfully.
Yeah, those are perfect examples. And I think Dude Perfect is in a similar spot where they're trying to bring in more people beyond, just the guys on that channel and bringing in other creators. And it's a delicate process. And especially as you're trying to introduce those new faces to your audience and build trust and, figure out, do they like it? And, especially on the podcast space, right? There's a new character on the show. Do you like them? Do you not like them? There's a lot of, wiggle room that has to kind of go into it. Let's go to potential questions that buyers will ask and basically how creators and operators need to, what they should be prepared for when it comes to those challenging questions, whether it's financial, whether it's just structurally how the business is run. What questions do you typically see?
Well, eventually a buyer is going to want to know everything and anything about your business. So you should be prepared to answer it all. And they're going to come up with questions you frankly didn't even think were possible, things you've never thought about in your business. So it is hard to prepare other than to just be honest, right? Like the best advice is be an open book. And I've seen a lot of successful entrepreneurs when they go through the process, first of all, just be frank with people up front. These are maybe the reasons why you wouldn't want to buy the business, right? And if you can get someone over the hump of, all right, these are the potential concerns, understand them, you've got a plan to address them. They're not going to become red flags or obstacles as we get later in the deal. That's going to save you some headaches because the natural inclination is to be nervous and say, oh, I'm worried about the buyer finding out about this thing, and then they're not going to want to buy the company. And in reality, buyers see stuff all the time. Like you're better off just kind of tackling stuff head on.
Being upfront.
It's totally. And so in terms of the questions you're going to get, there's multiple phases of the process. The first is kind of when you're in the first phase of kind of getting to know a buyer and you're in management presentations, and start with your story, right? Like what inspired you to start the business, the history of the company. So be prepared to talk about that. Talk about kind of recent financial performance. So you need to know your numbers pretty cold. You should also be prepared to talk about growth opportunities. So what are you working on now? And what are maybe the future growth opportunities, whether or not you've been able to tackle them? Maybe the buyer is going to have resources or support or ideas about how to help you unlock those future growth potential. So those are some of the core ones. As you get later on in the process, you'll go through due diligence. So after you've accepted an offer and you found the right buyer, you're going to go through different work streams for legal due diligence, financial due diligence, commercial due diligence on your business model and your sales processes. So every single functional area about your company is going to get examined and needs to be understood. And so you'll have hundreds of questions to kind of address there.
And for the financial side of things, James, I think this is a really big area, not only for creator businesses, but small businesses in general, right? It's a lot of the times the finances are very disorganized. They're not in a good spot. Do you have specific tools that you recommend creators use on the financial side right away? Obviously, you've got the basics like make sure you're separating your personal from your business, set up an entity, use QuickBooks, use those tools. But beyond that, in terms of organization, what advice do you have for making sure that a creator is organized on that side so that maybe it's not 6 months from now, it's 5 years from now, they're in a good spot?
The biggest thing is documentation, right? So every contract should be organized. You should make sure you have contracts, right? For vendors, leases, employees, anything where you have some sort of business arrangement with somebody else, it needs to be understood by a third party without you having to walk them through it, right? So good documentation is key. Financial systems are great. QuickBooks is certainly like the number one, or whatever accounting tool you prefer. QuickBooks kind of tends to be the gold standard. And so it's easy just in terms of All right, like I can get in there and pull reports on the fly and make sure that your journal entries are up to date. It's worth paying, an external bookkeeper to just kind of keep everything organized. Have your tax returns ready. Like all of that stuff just needs to be really buttoned up. And if you work with a banker or an M&A advisor like us or others, we'll help you with this, right? There's a whole kind of getting organized part of the process before you go out and start having these conversations. And we'll analyze your financials. We'll look at, your business documents and we're going to start to put together a preliminary data room where you organize a lot of these things. So we'll identify maybe some of those gaps or maybe some of those things that could be improved from a corporate housekeeping standpoint. But yeah, from a financial standpoint, it's really just systems, processes, documentation.
And from the evaluation side of things, and I know it's very specific and very, determined on the market and where things are at, but how are the multiples determined in this space currently, and how do you think those are going to change over the next couple of years?
So broadly in the creator economy, you have services businesses and software businesses, right? The software businesses tend to trade on a multiple or a valuation that's tied to recurring revenue, right? So meaning what's the predictable revenue that you expect to get in the future? Often for a software as a service, kind of recurring business subscription based, that's really easy. We look at annual recurring revenue and then you're going to get valued on a multiple of that. And the reason is, for the most part, your cost of goods sold are minimal, right? For a lot of software businesses, it's a fixed cost to create something. And then the more you sell it, it's kind of, you're realizing a high margin on that incremental software sale. For services businesses, this could be influencer agencies, talent management firms, media companies, creator businesses. They're going to get valued on the basis of EBITDA, which is earnings before interest, taxes, depreciation, and amortization. It is kind of a fancy accounting term, which is close to net profit, but has a number of add backs in it to just kind of help understand the business on let's call it like a normalized basis, right? Like as a going concern, what is the free cash flow that this business generates? And do we expect it to continue to generate that cash flow into the future? Because those earnings are what drive the value of the business. We're seeing anywhere from kind of like, call it 5 to 8 times being the average multiple for these services businesses right now. So when you're running a services business, as you're starting off, you want to emphasize growth. So you're reinvesting often, profits back into the business to drive that future growth. But as you start to think about a sale, now we can always kind of do what's called a pro forma financial analysis, or we can kind of add back certain expenses that you say, look, we can demonstrate we're investing in growth and here's why that makes sense. But you probably want to start to shift, the levers, like pulling back on growth and optimizing for profitability or for EBITDA as you think about a sale as a service business, because that's how you're going to get evaluated.
And is that the best way to increase your multiple, is to be more profitable, or how do you increase that? If you're, let's say someone like you comes in and say, hey, you're likely at maybe a 2 or a 3, how do I get to that 6 or 7? What's the best ways to pull that lever?
Yeah, good question. So there's 2 elements to the calculation, right? The first is how much EBITDA you're generating, so how much earnings you create. And then the second is the multiple. So you can fall in the normal range. So if we look at a set of influencer marketing agencies, looking at 10 different agencies, we expect many of them to fall within that normal range, right? Like on the bell curve, most of them should kind of be in the normal range. Some are going to be outliers in terms of great performance. Hey, they deserve to be paid a higher multiple. And others are going to fall on the low end of the bell curve. Hey, they've got some issues. They're going to get a lower multiple. What are the things that inform where your multiple should fall? Number one, growth rate, right? Like, is the business growing? Is it flat? Is it contracting? That's going to be a big driver. The second is going to be your margins, right? So an influencer agency with 30% EBITDA margins versus 20% EBITDA margins, they're going to get valued differently. There can also be some expertise around a certain vertical, or maybe you've got like some great talent. So if you can kind of brand yourself as we're the leader in XYZ, you might command a premium, right? You might deserve a higher multiple for that. And fundamentally, at the end of the day, it comes down to like, what is the right buyer willing to pay? And so in general, you will maximize your multiple, the expected value of the business, by selling to the right strategic fit, right? So there's a lot of things you want to optimize when selecting the right buyer, but if you can demonstrate to them that this business is worth potentially even more in their ownership than in your ownership, that's when you are going to command those premiums.
Yeah, that's super interesting. The margin aspect too is something I'm always curious about. I heard Patty Galloway, a famous YouTuber, YouTube strategist, talk about he recommended keeping your margins at 40% if you're under 2 million in revenue. Curious how you think about margins from either a gross or a net perspective. I don't know if he was, I think he was, I'm pretty sure he was talking about net. But curious on your take on when it comes to running the business, at a certain point at certain margins, and then once you're kind of at that spot where you want to sell in the next couple of years, what you need to transition those margins to.
Yeah, the margins are going to be different for every business, right? A talent management business has very different margins than a media business, has different margins than an agency business. And we can kind of help you understand what that looks like in your category or for your business type. In general, yes, higher margins are better. And so there's different ways to arrive at that, right? Do you price at a premium? Do you control your costs? Are there other ways to increase your average monetization, right? Either that, whether that's RPM, whether that's average order value, if you're like in the e-commerce space, are there things that you can do to sell more to existing customers, right? Anything like that where you can potentially increase your margins because you've already done the customer acquisition cost, or if you can kind of sharpen the needle on your cost basis, and so either your cost of goods sold or your general expense level is reduced, that translates to higher margins. Great, right? Like the stronger your unit economics are, the better your business will perform in terms of generating earnings, and then that is going to translate to value for a buyer.
And I'd imagine that a buyers, they want to see stable income, right? They don't want to see, and that's where stuff like Patreon memberships, if you've got a SaaS tool integrated into your creator business, which we're seeing more and more of, those are the things that they like. They want the consistent revenue versus if your business is really heavily dependent on brand deals. How do you think about that ratio?
You're right in that anything recurring tends to be more highly prized, right? The value of that is higher. Now, look, there are nuances to that, right? Because you might have a great membership space from Patreon or something else, and say the macroeconomic conditions are poor, arguably like kind of a circumstance we're in right now. If consumer spending tightens up and your fans love you, but they can't afford to spend that extra 10, 15, $20 a month, are your Patreon memberships at risk, right? Brand deals can be great, right? Especially if you've got recurring advertisers that come back and spend with you every year. Maybe they're spending more money with you. Maybe you're finding new advertisers. Fantastic. But in a tough economy, does marketing and advertising spending pull back because brands are worried about tariffs or uncertainty about the economic future? So yes, look, in a steady state environment, the recurring revenue is going to be highly prized relative to things that like programmatic ad revenue or other things that may fluctuate year over year. But if you are diversified and you've got kind of healthy income streams from a variety of different places, in general, that tends to be a good thing.
Let's talk about the red flags side of things. What are those biggest red flags that when you start to look at from your standpoint, which you're coming in very early on before someone is even likely talking to buyers, what are those initial red flags that you're telling the creator, telling the owner, hey, we got to clean these up ASAP?
Well, in general, I think a buyer will look at the team. So do we feel really good about the founders? Are they staying around? What's the rest of the team? Is there kind of depth to the bench? Do we have the right people in place to execute? That's important. Financials for sure, right? Is the financial health of the business in good shape? Is the financial hygiene in order? And we know that we can trust kind of what we're getting. We're going to look at the other kind of risk analysis of is this business going to continue to be able to grow and execute on what it's doing today? Risk could be key person risk, as we talked about. It could be macroeconomic risks, as we touched on. But it can also be things like, what's the threat of AI disrupting this category? Maybe there's new competition, or there's new production methods that are going to make this business or this content strategy less effective than it was before. So, any sort of risk areas need to be identified and have a mitigation plan against them. But yeah, in terms of red flags, I would say the most important things are just having your house in order, right? Like kind of coming back to documentation, systems, processes. If that stuff's in place and there's, no concerns or issues, then you're in most cases going to be in good shape.
James, when you look at the overall kind of landscape of the M&A space and the creator economy, whether it's influencer agencies, whether it's SaaS, whether it's creator businesses. What do you think the next couple of years will look like in terms of who's acquiring who? Do you see more creator businesses acquiring other creator businesses, going after more SaaS to integrate with them? How do you think about the landscape right now?
We've definitely seen activity picking up, right? So last year, 2024, was a banner year for creator economy M&A. And this year, Q1 started off very strong. We've seen quite a lot of deal activity in Q2 so far. So all signs point to there's a lot of strong momentum in the category, which is great. And I think it's reflective of the fact that we're seeing renewed investment interest in the space. We're seeing companies hiring and growing, and there's really interesting businesses being built in our industry, which is exciting. We expect those trends to continue, especially as traditional media incumbents, agencies, software players realize how important this is as a growth segment to their business. You've seen that reflected in the traditional media agencies, WPP, Publicis, Omnicom, buying influencer agencies, wanting this capability or DNA in-house. Same thing is true of talent management. You're seeing larger traditional talent firms buying digital representation businesses. We're even seeing some private equity money, kind of the smart money, getting into the space and wanting to lead roll-up strategies or taking bigger positions in players that are growing pretty quickly. So the fact that there's growth equity and roll-up activity happening is also a good sign. But yes, you're going to have these strategic incumbents who want to play in the space. You've got larger established creator economy players who are going to identify exciting startups that they want to bolt on or add to their portfolio. So yes, we're going to see kind of continued interest and activity in all of those categories.
I'm curious how you think about the PE, private equity versus venture versus other sources of investment or acquisition. What's your take on it, and what would you advise someone who, a creator who comes to you and says, "Hey, I need X amount of dollars. I'm looking at all these routes." What do you think?
The good news is there are more options than ever for creators, right? So starting off, I would recommend keep things small, hold on to as much of your cap table for as long as you can. And so that's going to mean bootstrapping or finding other ways to kind of generate income as you figure out your creative strategy, figure out what works. If you're thinking about bringing in capital, it should be, how do I trade time for money, right? I'm willing to bring in this capital because it's going to accelerate my growth and help me get to my objectives faster. So think of it as like pouring gas on the fire. It's to double down on what's working, not to, in many cases, kind of figure out what works. Now, the different types of capital available are venture capital, right? That's traditional kind of equity financing, tends to come in early stage businesses, and that's promoting growth. For a software business, it might be, hey, let's invest early and let you build out your initial prototype or find customers. If it's later stage capital, it might be to, like I said, to kind of accelerate the growth. I don't see, there are some funds who are investing in creators. And so Slow Ventures is a great example of this, kind of investing at the Series Seed or Series A level. Then you've got Churning Group, which is doing later stage bets, so investing in Series A, B, C companies. But that model is really focused on finding talents who've got audience and then kind of building businesses around them. So sure, hey, you've got kind of a great media business, but how do we also help you sell a product or launch other aspects to the empire? The other types of capital available are creator financing. So you've seen companies like Spotter, Breeze, Fundmates, others kind of pop up, which are saying, hey, we're going to either license back catalog or lend against future earnings. And there's some kind of interesting models there, which are great because a lot of traditional banks or lending institutions don't understand the creator economy. So if you're a creator like trying to invest in your business and I want to launch a tour or open a second channel, or I want to, buy a house and I need a mortgage, it's really hard to do that with a traditional bank. And so great to see these new creator financing solutions exist. You mentioned private equity, right? Private equity tends to get involved at a later stage. I think they're most known for taking majority positions. So an example would be Uscreen, right? Just got a big capital infusion from private equity. They actually bought a majority position. They're going to continue to grow that business, which is great. It later, or formerly Maverick, is private equity backed. And so again, you're seeing private equity entering the space, providing capital for organic growth as well as M&A, so inorganic growth opportunities. So that's kind of a smattering of the capital options in the space, and they're kind of right for different types of companies at different stages of growth.
No, that's a great breakdown. Will you give insight on the expectations that come with venture versus private equity? Because I do think that's important to understand is once you get on the venture train, there are very high expectations of, typically high expectations of fast growth and explosive growth. It's not, hey, you can grow 5%, year over year. They need it to go fast. And typically say they invest in 10 companies and they need one to go absolutely ballistic. Explain the expectations that come with that versus a private equity versus selling your catalog and then taking a percentage of that revenue and paying that back slowly over time.
So good point. The traditional VC model, right, as many people want to understand it, is you're going to take on capital. The VC is making a number of bets, right, 10 plus. And in that portfolio, they expect probably 8 of them to go to zero. One or two to maybe break even, and then 1 or 2 to return the fund. So yes, the VC math is based on this has an opportunity to deliver 10x, 50x, 100x plus return, and typically on a long time horizon, right? So the average VC fund is kind of a 10-year hold, but some of those investments might be, 5, 8 years, could be longer in some cases. But in any event, yes, the VC psychology is such that we need these companies to be dramatic growth outliers in terms of performance. That's great for the right types of businesses that need the capital. It's often very well suited for software. It can be tougher with other types of businesses. The other problem is you can kind of get hooked on the VC treadmill. So
the train.
You raise the series seed and it's like, great, you're executing well, you deliver against your goals, but then you need to go out and raise the series A, and then you need to go out and raise the series B, and the expectations kind of continue to compound. And again, it's amazing for the success stories, but not every business makes it. And so those can be challenging.
Yeah. And as you and I talked about in the pre-interview, I think a lot of creator businesses, this is much different than a SaaS, company or a different model there. But a lot of these creator businesses, they just need working capital. They don't necessarily need $3 or $4 or $5 million. They might need 50 or 100 grand to do, hey, we need to build a new studio because we think we can do X, Y, and Z, or we need a little bit of upfront capital to do this, physical product that we want to launch. And we've already got a wait list of, 1,000, 2,000 people.
Which is awesome. And in those cases, creators should look at alternatives. Can they do debt financing? Can they do pre-orders, right? Like think about a Kickstarter or a fan pre-sale rather than, going on and taking expensive equity if you don't need it.
Yeah, the crowdfunding option I think is still very underrated, and YouTube legends like Hank Green have utilized that for years. But I think more and more creators are starting to, especially when you have such a loyal audience, an amazing audience, it doesn't have to be huge. But if you need 10, 20, 30 grand and you put a compelling campaign together, you can get where you need to go without taking on a bunch of investors and a lot of people that will likely tell you how to run the business, or at least give you hints on, hey, this is how we want to see the business run, which I think can be very challenging, especially if you've never had that, right? You've never had to report to someone, you just report to yourself. That can be a big adjustment for a lot of people to make. Let's kind of transition to some of the biggest levers that people can utilize for growth in their creator business. How are you seeing this evolve, and maybe how are you seeing other examples? I know you gave some examples at the start, but how do you see creator businesses growing over the next couple of years as YouTube just continues to snowball faster and faster, but other platforms as well?
Sure. No, I love this space, and it's amazing to see it continue to evolve and grow and change every year. Continue to be very bullish on the category. It's incredibly dynamic. You see whole new generations of creator emerging on new platforms. You see new content formats, new businesses being built. Particularly love seeing more infrastructure plays. So creator services, technology businesses that are building that kind of picks and shovels or scaffolding layer of the space. That's so important because even though the creator economy is 10, 15, 20 years old at this point, we're still in early innings, right? Especially relative to other media formats, TV, other types of content. I want to double click on that. Give examples of those kind of picks and axes, examples of those companies. Would love to understand that. Sure. Well, you've got digital rights management services companies, whether that's a Collab DRM, Superbam, Tower House. You've got, servicing individual creators. You've got companies that are helping with direct ad sales. You've got fintech companies like Carrot Financial or merch solutions like Fourth Wall that are helping creators build out those aspects of their business. So in addition to all these amazing creators and these creator media companies, you're now seeing these companies that serve the ecosystem, right? Whether those are serving creators or in some cases even serving brands or other stakeholders in the space.
Yeah, no, that's super cool, and it's cool to see more companies take over different categories, whether it's the finances, like the Carrot, even the merch. You're starting to see more and more companies taking over the accounting, financing side for
Yes,
creators,
definitely.
like day to day, like you were saying, which is very beneficial, and also I think as a creator you have to be careful with those as well. It's someone who's going to manage that day to day. You need to really trust them. But continue on to kind of what you're saying. I was just curious on that.
No, it's a good point. And then there's also this kind of the rise of the creator COO or president, right? More creators as they scale are thinking about their business as a media company and bringing on executive leadership to help them make that transition. So that's been exciting to see. But in general, yeah, very excited about the future of the space in terms of the levers that creators can pull to grow their creator business. One is diversifying across platforms and revenue streams. So if you've built a successful business on TikTok, Instagram, YouTube, you name it, start thinking about what can I do on Snapchat or Pinterest or Facebook, right? There's kind of other ways to extend your reach and build audience. What other products can you build? So amazing to see the rise of creator-led brands. And there's the canonical examples, right? Prime and Feastables and Michelle Fonzipsi and so many others like Chamberlain Coffee that paved the way. But there's a lot of emerging creator brands as well. And it's kind of revolutionizing direct-to-consumer marketing and e-commerce. And so I fully expect in the next 10, 20 years, just about every direct-to-consumer brand will have some sort of creator ambassador. And so as a result, the marketing strategy has changed. These creators have what we call kind of like a negative customer acquisition cost because they're already doing the marketing. They have this audience channel and they're monetizing it. So they're getting paid to essentially do their marketing playbook. But then they find valuable things to sell through to their audience, whether that's the model I like to think about is there are consumables, right? Like Feastables, right? Where it's like buy a chocolate bar over and over again. And then there's collectibles where you're doing some sort of like premium merch or a one-time purchase that is really valuable for a creator fan, right? So maybe that's like a board game, or maybe that's all these other kind of ways. Like Epic Gardening is launching
Such a good one.
tools. Yeah, like they have seeds, so they have consumables, but they've also got tools and resources that might fall into the collectibles category. So anyway, I think there are a lot of ways to think about new platforms, new content strategies, new products, and then that unlocks new revenue streams.
Who are your favorite kind of emerging creators, or maybe just the not as well-known creators that you think are doing a really good job of doing what you just said, diversifying, building product, understanding their audience, and how to build things that they want?
Yeah, it's a great question. I'll probably struggle to think of names while we're talking, but there's amazing creators on so many platforms that are doing this, and even new platforms, right? Like LinkedIn is a platform I've enjoyed being a part of for many years, and you're starting to see the rise of its creator community and creators like kind of education creators or business creators who are building really interesting businesses, talking about their profession or expertise, but also finding a way to monetize that, whether that's through their direct business, coaching, consulting, agency business, whatever it is, but also creating content. I think we'll start to see more monetization. I've also seen that from newsletters, right? There's been like a rise of creators launching podcasts, which is awesome for building that direct creator to fan engagement and interaction. But now we're also seeing that reflected in the rise of newsletters. And so I'm bullish on all of these new kind of content formats as ways for creators to connect.
I want to go back to what you said about more creators bringing on COOs, presidents. What do you recommend, or when do you recommend someone, start to think about that? And in my perspective, it's you've been doing it consistently for, at least a couple of years, and you've got a solid, foundation as far as subscribers, and you've really kind of found your voice there. And I think a COO or president, someone on the ops side, comes in when you're needing to take it to the next level, whether that's building products, really need to figure out some of the basic marketing strategies, whether that's building the brand, building the website, but kind of piecing it all together. But I think you don't want to bring that person on too early, because you're likely not going to have the cash flow to pay them. And even if it's an equity thing, you still have to find a path to paying that person, paying other team members. But how do you think about it?
I think about it like in the scope of the creator journey over the life cycle. The first thing is, how do you get yourself to go full time, right? So a lot of creators start nights and weekends. They're passionate about it, but they're working a day job or finding other ways to make ends meet. So first is like unlocking your time to go all in on creative and building the business. Then the next step is, what are the things you take off your plate? Maybe it's hiring an editor or production team, or all of these resources that free you up. Like as an entrepreneur, the same mindset applies to creators. Your job is to constantly tackle the hardest problem in the business and then automate that, systematize it, or delegate it to somebody else. So you're constantly giving your job away and then reinventing yourself and what it is that you spend your time on. So the same is true of creators. What are the things that I can give away or hand off? And eventually that rises to the level of, okay, I've got maybe a small team. I'm ready to bring in a COO, a president. I want someone who maybe complements my skill set. Are there gaps or weaknesses in my areas of expertise? And this person, those are their strengths. Amazing. Or maybe there are certain functions that you want them to kind of take over, and then that frees you up to spend more time on the things that you enjoy and the things that you're good at. Like that's how you unlock the next level of growth.
That's super cool. Are there any operators or presidents, COOs in the space that you really admire? I know I just listened to the Dude Perfect episode with Colin and Samir and Andrew Yaffe from the NBA coming over. I mean, a massive brand coming from the NBA and going to a really big brand as well that's been around for 15 plus years now, I think, and just what they're building. But more, I was talking with another guest, Charles Haynes.
I love Charles.
He's awesome. From Ziggurat. We just released his episode, and one thing he was saying about the operations side of things was that we're going to see more operators coming from outside the space. It's not going to be people who are editors and then turn into operators. It's people who are really good at an outside thing coming in and helping creators on the op side. It's someone who was helping early stage startup founders before, and now they're helping early stage creators on that business side of things. So his take was just a lot, and I agree with it. We're going to see more and more people from the outside, other industries coming in and taking those skills and applying them to the creator economy, which I think is spot on. I think we need really good operators, and that's part of this show, is just the fact that there's going to be more operators. There's going to need to be more operators and trusted people. And I think when I say operators, it's beyond just an agent or a manager who's doing deals. It's being in the trenches, understanding how do we, figure out your packaging? How do we explore this channel or that channel and do it properly? How do we develop a product? And thinking through those things is often not, it doesn't come natural for a lot of creators.
No, you're right. And there are some really incredible creator partners and operators out there. Brian Flanagan at Mythical, Patrick Reese at Cocomelon, Sean at Darman Studios, right? They're just building really great businesses. And these are seasoned media business professionals who kind of level up the companies and think about what are the next areas of growth. So there are some examples of maybe profiles of people that you can kind of take with you. And if you are a creator, the best way to look for this person is to network, right? Ask your friends, maybe work with a recruiter, like find ways that you can tap into who are the really talented people in our segment that understand this space really well, can unlock, your time, and then think about being a real thought partner with you. Like obviously you're spending a lot of time with this person. So the people fit needs to be really strong. The culture fit needs to be strong, but also making sure they have the skill set that you're looking for to take the business to the next level.
Yeah, it's a great point too about the foundations of the relationship itself. You're going to be spending so much time with them, making sure that you're asking all those questions, and especially if you're going to have a percentage of the company itself, right? That's a whole nother level. It's like finding a co-founder. I think we talked about this a little bit, but right now the creator economy jobs board, and I want you to talk about that and explain that. But right now it's a lot of people are trying to find editors, a lot of those kind of tactical skills. And I think it's going to be more and more where it won't be as challenging to find a really good president or operator and you don't have to be Dude Perfect level, right? Like that's a huge, they hired a well-known recruiting firm to make that happen. And That's kind of the 1%, the 1%, or the Mr. Beast getting new presidents or new
Yeah,
CM.
Mark was amazing for Beast, right? I mean, absolutely.
Exactly.
So
Yeah. So, and I think that's happening, but I think it's going to trickle down where it's like more of the kind of creator economy middle class is going to start to also have operators as well. And they may not be, the Mr. Beast or the Dude Perfects, but there is still really good room for that creator economy middle class to expand, but it needs to be really good operators.
yeah. And they might be fractional, right? You're seeing the rise of like a fractional COO for a creator business. So yeah, I think you're right, and there are more tools and resources. One of the things that we launched, Creator Economy Jobs, grew out of that passion for how do we connect candidates and job seekers with amazing teams that are growing their business, and whether that's creator businesses that are growing, and there are awesome tools like Roster or YT Jobs that help find production staff, editors, thumbnail designers, etc. Also, these businesses need professionals. So how do I find a CFO or VP of finance? How do I find a head of HR, an engineer, a marketer, a salesperson? So that was really the inspiration for Creator Economy Jobs. I would get asked weekly, I still do, right? Like, hey, we just raised our last round and we're looking for a head of marketing. Who do you know? And I was making introductions over text message and LinkedIn and email. And I was like, why doesn't this exist?
Got to be an easier way.
Yeah, we built something to address it.
The ops side and the bringing in a COO or president, that part I think really, from my perspective, is exciting. I think there's so much room and for really good talent from other industries to come. A lot of these really good operators. What separates the good from the not bad, but just the good from the great?
Gosh, there's kind of like an X factor, right? Like a lot of these people are very thoughtful, very smart and well-read and studied about the space. I remember when I met Adam Reimer years and years ago, who became the president of Nerdist and then Legendary Entertainment. And he was just kind of this brilliant mind who thought a lot about media and the history and the evolution. And so many of these people, I think, kind of have that interest or that kind of aptitude. It's being very well-versed in our space. They often tend to be very well connected, right? So oftentimes the skill set, you need some sales or business development expertise, and a lot of these people tend to be really good at that as well. So knowledge of the category, well networked, and then the last is probably just hustle, like willingness to roll up their sleeves and get the job done, because creator businesses move quickly, and you don't want to hire some corporate type who's not comfortable kind of carrying the weight. You want someone
moving fast.
Work alongside you and hustle and make it happen.
Yeah. I think it's a good point about the hiring someone maybe a little bit too corporate who hasn't maybe been in a smaller business or a medium-sized business where they need every tool ever in order to get started, and they don't kind of understand how to, hey, this is duct taped, but eventually we want to unduct tape it and move to this. But for now, this is what we've got. I think a lot of good operators will come from that early stage startup game where they might have been an early employee, and now they're kind of translating those skills to just a different environment. What advice do you have for those people who want to be, the Andrew Yaffe's, the operators for these really great creator businesses? What would you tell them?
If you are aspiring to that career path, then you should get as much practical experience working in creator businesses as you can. So wherever you're starting, interning, entry-level job, climbing up the corporate ladder, work in these creator companies, get your hands dirty and find ways to get that hands-on experience. The second thing would be meet people and network and establish yourself in the business. That can be going to events and conferences. There's like meetups and stuff happening in LA all the time, or if you're in another creator economy city, the Bay Area, New York, like get to these big creator economy capitals and spend time with the key players there. Put yourself out there on LinkedIn, like create content, like, practice what you preach and be very active in this space. Like maybe start a TikTok or share what you're learning on Instagram, like find ways to be a practitioner of the art. And then finally, like work on both the soft skills and the hard skills. The hard skills you need as an operator are going to be strong financial acumen, team management and leadership skills, hiring, sales and business development. I think serves you well in any career path, but is important in this field as well. So think about the hard skills, develop and practice the soft skills. Those are the things that are going to set you up for success.
Thanks for listening to this episode of the Creator Ops Podcast. If you're interested in chatting more about the creator economy, send me a message on LinkedIn or email me at thomas@creatoropsmedia.com.